The mortgage rates are rising. The number one question a lot of people have now is, should I wait to buy? Is it okay to still buy? At the end of the day, that's all going to be based on your personal situation. Yes, the interest rates have risen, but where the interest rates were historically low numbers. Those interest rates of 2, 3, 4% were not always common. It was very common for people to have mortgages with an 8, 9, even 10% interest rate. So just because they have increased the rates doesn't mean that you still should never think about buying. Because at the end of the day, it's going to come down to your situation. You can still buy. Maybe you can't buy the $300,000 house that you wanted. But that doesn't mean that you still can't buy a $230,000 house, $240,000 house. At the end of the day, it comes down to your budget. What's the monthly payment that you can afford every month? Once you know the monthly payment, now what's the maximum purchase price? Okay, now that you know the maximum purchase price for that monthly payment, you have to decide and ask yourself, are you willing to accept that the home you get won't have 100% of everything you're looking for? There's no home in the world that has 100% of everything, especially if you're a first-time buyer. But there's a few things you need to, again, ask yourself. First question is, what is your budget? Your budget will determine where and what you're looking for. And also, you got to ask yourself, really, if something happens at the job, if I have temporary no money for a little bit, like, is this monthly mortgage payment really hurting my budget that much? You might be able to afford $1,500 a month, but you might be more comfortable with $1,200 a month. There's a big difference. As a licensed real estate professional, it is not my job to determine what you and your family are comfortable with in the mortgage payment. That is for you to decide at the end of the day. You make the final decision. This is your home you're purchasing. Your pre-approval may get you all the way up to $300,000, but that doesn't mean that you have to get a $300,000 house. So the first question is, what is your budget? Second question is this the house you're going to be in 10, 15, 20 years from now? So many times buyers get caught up in a situation where they're asking themselves, well, I don't like it because it don't have this and it don't have that. But does it have the major 85, 90% of the other things that you're looking for or comparing for, or that is important to you? If that's the case, then why does it have to be a house right now that has all the bells and whistles that you're looking for, unless you plan on living in this house for the next 15, 20, 30 years? If you're a first-time buyer, 9 times out of 10, you're going to end up buying another house sometime in the future. You may decide to keep that house, buy another one, and maybe use it as a rental for a family member. Or you may just decide to just sell it, get the proceeds, and use those proceeds to get you an even bigger house. But 9 times out of 10, the days of buying a house and you staying in a house for 30 years, those times are not really here. Are there still some situations where people do that? Yes, but it's not common. So if you know for sure you're not probably going to be in this house 10, 15 years later, then don't make such a big deal about it. And you can still buy homes in this marketplace right now. Again, the rates just increase the monthly payment. But if you are just getting by with an approval, with the interest rates being low, then you were never truly in a financial position ready to buy because you were just getting on the borderline. So that's the second thing you need to ask yourself is this the home you're going to be in for the next 10, 15, 20 years? The third question you got to ask yourself, well, not really a question, but the third thing you need to remember with these rising interest rates is that you always have the option to refinance the loan. Well, Jamere, what does that mean, refinance the loan? Refinancing a loan means you have this loan, you have it for 30 years. Now, all of a sudden, 3 years go by, the mortgage rates drop. Now you can redo a new loan with that bank, or you can do it with a different bank. More than likely, you're going to do it with a different bank to get you a better deal. You redo the loan, but if you got a 30-year loan in the beginning, you can refinance 2, 3 years later in a 20-year loan, 25-year mortgage, and you can still have a lower monthly payment because the rates have dropped. So that doesn't mean, a lot of time people think when you refinance, that means you have to start exactly from 30 years. No, I've had investor clients that they had a 30-year loan, and when the mortgage rates were historically low, like they were the past several years, they had a mortgage where they had another 22, maybe 23 years left to pay on it. But now they refinanced the loan into a 10-year loan. Now, with the rates being much lower than when they originally bought it, their specific situation, their mortgage payment stayed the same because they went from 22 years to a 10-year loan, but they just took off 12 years on the mortgage and they were still able to afford the monthly payment. So this is where, again, you want to go with and work with the mortgage lender to be able to see what's the best options for you. But again, you got to ask yourself and understand that you can always refinance that loan when the mortgage rates drop. But if the mortgage rates go up even more, now you're locked into that low rate. If you buy a home now, and let's say it's at 6.5% interest rate, but you can still afford the monthly payment. What if a year from now it goes up to 8.5%, 9% based on the economy? Well, now you're still locked in at that 6%. But a lot of people think, well, what happens if it goes lower than that later on? Well, if it goes from 6% to now 3%, you can now refinance into a 3% payment, have a much lower payment, and you can knock off some of the years on your loan. So again, these are the things that you want to think about. But just because the rates are rising doesn't mean it's a bad time to buy. You also got to ask yourself, who are you getting this information from? Are the people telling you don't buy right now people that have actually bought a home before? Do they understand how refinancing works? Do they even understand your situation? Everybody's situation is different. So these are the things, again, you need to be able to ask yourself. But just because the mortgage rates are rising does not mean that you can't buy real estate. There's never a bad time to really buy real estate. It all depends on your situation.